Good day, everyone. My name is Trina Scully, Outreach and Events Manager for the Saskatoon Chamber of Commerce. The Chamber team and many of you are participating today from Saskatoon, which is situated in Treaty 6 territory and the traditional homeland of the Métis people. As a Chamber, we are committed to growing Saskatoon rooted in shared success, respectful relationships, and true reconciliation. If you are joining us from other parts of the province today, a warm welcome to you and thanks for being here. This is our Power Up series, which features industry experts who can provide Chamber members with real-world tips and tools and give their businesses a boost. Today's format is simple. If you have any questions throughout the presentation, just pop those into the chat and our speaker will answer them for you. So today, our featured speaker today is Janet Mercredi. Janet is a business coach at JKM Strategies. She helps many business owners with her wealth of knowledge in finance consulting and financial advisory. Janet provides training to those businesses in need to break the cycle of living paycheck to paycheck. For most business owners, managing the business side of their business can be a chore. Janet has seen many business owners put everything into their businesses financially, emotionally, and physically, and still not draw a paycheck because they think that is what they are supposed to do. Janet will coach them to structure their business so that not only do they receive a consistent paycheck, but also a bonus every quarter just for owning it. We are delighted to have Janet with us today to share her expertise with all of you. So please welcome Janet Mercredi.
Wonderful. Thank you, Trina. That was a very nice introduction. And thank you to the Chamber for allowing me to do this presentation today. I'm excited to be here with you all. Thank you, everyone, for showing up. It's nice to see some faces. So I am going to start by sharing my screen. And so in doing so, I'm going to ask you to please confirm, tell me what you can see. Can you see my slides or can you see my slides with the notes?
Just the presentation.
Okay, perfect, wonderful. Technology worked in my favor today. That's great. Thank you very much. So yes, thank you again, Trina and the Chamber for this opportunity today. So hi, everyone. My name is Janet Mercredi and I'm the owner and president of my own company called JKM Strategies, and I am a money coach here in Saskatoon. Now, my firm, JKM Strategies, is a certified profit first bookkeeping firm, and I'll explain to you what that means as we go along in the presentation. But as mentioned in the opening introduction by Trina, because of owning a bookkeeping firm for the past several years here in the city, where I work with clients locally, but also virtually across Canada, I have watched a lot of them put a lot into their businesses financially, emotionally, and physically, and still not draw that paycheck because they think that's what they're supposed to do. And quite honestly, it's not their fault why they don't draw that paycheck. Because the traditional accounting logic, they teaches us that sales minus expenses equals profit. So when you hear that equation, subconsciously, we as the owners of our businesses come last. Now, bookkeeping, one thing I have found in running this firm for quite a few years is that bookkeeping, it is essential to running a strong business. But it tells the story of our past because it's a very reactive service. Now, don't get me wrong. I am in no way telling you that you do not need a bookkeeper for your business. In fact, quite the opposite. Every business needs a good bookkeeper and accountant to keep them on track. But what I found in being that good bookkeeper was that my clients, they all had one thing in common, and that was that they were all struggling with cash flow. So what is cash flow? Simply put, it's the tracking of money in and out of your business. Now, most business owners know that they need to drive profit, but they don't know how. And as a result, they are part of the 82% of small businesses in North America living check to check. Working with me, I structure their business so that they not only receive a consistent paycheck, but also that bonus just for owning it every quarter. And I'll let you in on a little secret. My business was not immune to cash flow struggles either. So I fully understand how hard it can be to own a business and not get paid for it. Because you see, back in 2018, I was struggling with feelings of shame and I was embarrassed. Money was going out as fast as it was coming in. And I never knew what I could take as a paycheck so that I could contribute to the household finances. Every month was a juggling act, and I was juggling literally 3 credit cards to feed and clothe my kids. But that was until I learned the most efficient cash management system I'd ever seen. And this is what I'm going to show you here today. It's so effective and simple that I use it in my own business. And I now have financial security in knowing I can provide for my family. But that's not enough about me. If you want to read more about me, you can visit my website. Today's presentation is about you and how you can structure your business so that you are driving profit and being paid a consistent paycheck from your business. So let's get started. As Trina mentioned, as we progress through the slides, if you have any questions, please feel free to drop them in the chat. I'm hoping I can see the chat now that I'm sharing my screen. I'm not sure if I can, but so even if you wanted to be more interactive and come off of mute and ask me a question, I'd be happy with that as well. So here we go. When I first engage with a client, there are two key principles we focus on at the start. Know your business why, and every dollar earned in your business has a job, which we're going to explain a little bit later. But first, we're going to focus on your why. Why are you doing what you're doing? Author Simon Sinek coins it as such that once you discover your why, you have a sense of purpose, and that alone will provide you with focus, direction, and confidence. So today, I'm asking each of you to define your why. What is your business why? Now, it might seem like a simple question, but it has a large impact because lots of times we business owners get so inundated with working in our business, our why gets forgotten. So I ask you again, what do you want your business to do for you? Is it financial freedom? Is it to be your own boss? Is it to run your own schedule? Or maybe it's to leave a legacy for your family. Either way, I want you to think about that and write down your top 3 reasons why. Seriously, write them down. Post them on your wall, on your bathroom mirror, someplace you're always going to see them to remind you why you're doing what you're doing. Because as a businesswoman and a mom myself, I know what it's like to be pulled in multiple directions. Life can be chaotic, so you must remember the reason you are doing this. Because if you don't know why, your business will become another chore on the to-do list, much like laundry, and you'll begin to resent it. Then, once you've discovered your why, I want you to put a dollar figure on it. Because this is one of the jobs our money has that flows into our business. It pays us, the owners. And hey, I'm certain you did not get into business to work 16 hours and have nothing to show for it. If you did, then you might want to skip this slide. But if you didn't, keep on watching. I'll promise it'll be worth your time. So, again, once I first engage with a client, one of the exercises I take my clients through is called the personal income targeting exercise. And so I'm going to run through that with you with some illustrative numbers to show you an example of how we do that. This is a personal income targeting worksheet. And this is the worksheet we use to help you figure out the amount you want to target. As a side note, just so you know, all of the worksheets you are about to see in this presentation will be available to you at the end. So I'll let you know how you can access those. So the very first thing we do with this personal income targeting worksheet in section 1 is we write, in this case, again, strictly a number I picked off out of a hat for illustrative purposes. I'm going to use the example of $65,000 in this box. On the next slide, I'll give you a sneak peek as to how I came up with that number or what I would do with a client when we're going through these numbers. But for now, we're just going to use 65,000. This is the number. If you were looking at your, let's say all of 2021, all of your financial reports, looking at your bank statements, this is a number that your business paid you. So we're going to use 2021, the full 12-month cycle as an example in this as we keep on going. So section 1, we write down what we were paid last year from our business. This is the number, and then we ask ourselves, in section number 2, was that enough to meet your personal responsibilities? Is that enough for you to take home on a regular basis to live the way you want to live? Most people circle no in this section because, hey, we could all use more money, right? So now I want you to think about the life you do live and you want to live and ask yourself a couple of questions like, this is where we're going to go into section 3 of this worksheet. Did you put enough away for your retirement savings plan or your tax savings account? Did you put enough away for your kids' post-secondary education? Were you able to donate to a charity? Were you able to do everything you wanted to do with the amount of salary, that's $65,000 in this case, that you received in all of 2021? So then that carries us down into section 3, and we're going to take that a little bit further and look in more detail at your personal financial goals. Now, this doesn't mean that we're going to get as detailed to say as I want this many stocks and bonds. But I do want you to think about what you really want long term. Do you want to buy a second property? Do you want to travel? Do you want to have a summer property and a winter property? Do you want to have timeshares? Do you want to buy a boat? Do you want to have a big nest egg set aside so when you retire, you feel comfortable enough that you have enough money? So again, just for illustrative purposes, I'm saying here that this particular person, they want to be able to put away $10,000 a year into a TFSA. They want to travel 15,000. Kids education, maybe 20 grand a year. If you're anything like me, I have 2 kids starting university in the fall. So this is definitely a replica of what my business goals look like. And then we're going to list them all here in section 3, what we want, and put a dollar figure to them. And then we're just simply going to total them here at the bottom. So we made $65,000 last year. This year we want to target or dream about the life we want, an additional $45,000. By listing the things that are important to you and your personal life, you will have a better idea of why you're working so hard in your business. And most importantly, it'll put it in black and white, what you really want and why you do what you do. So we're going to add these 2 numbers together. That brings us to a total of 110,000. So now we're going to use that number to reverse engineer our business goals. Do we have any questions or concerns or comments before we go on to the next slide? If anything you've heard so far? You can come off mute. I can't see the chat line anyway. Okay, wonderful. So now we're going to reverse engineer it. Again, this is another worksheet that you're going to see have available to you at the end of the presentation. So using the example of $110,000, I'm going to say I want to make $110,000 a year in my owner's compensation. So in order to figure out what that would look like in terms of sales for my business, we're going to do some calculations. So in this particular example, $110,000, you've determined that you want that $110,000. So what we do is we take that $110,000 and divide it by 50%. And that means the real revenue for our business needs to be $220,000 to support our personal paycheck of $110,000. Side note, and you're going to see it on the next slide or the next few slides, these percentages are listed here. You see this column here, A through F. The author of the book, Profit First, Mike Michalowicz, when he did a bunch of research on hundreds of thousands of businesses, these are the percentages that we use when we're using this methodology in our cash flow. So we deal with percentages. So right now I'm working on column A. So in this case, the gross sales for this business needs to be at $220,000. So I'm using column A and all of their percentages because it's the real range revenue of $0 to $250,000. So that's where these percentages come from. And I'll talk about a little bit more about them later. And then all we're going to do is we're just going to fill in the rest of the percentages based on column A, like I just said, because we want to make sure that you stay in your lane and use the same percentages from that same column. So now we're just doing some simple multiplication. We're writing out our percentages on the sheet. These are called our target allocation percentages, which are the percentages that I took here from column A, and we times them by the 220%. So this is a business that is making, in this example, $220,000 in gross sales. $11,000 of that is profit. 110 is owner's pay. 33,000 is for tax purposes, for our tax obligations, and 66,000 is used for operating expenses. So one thing I want you to keep in mind here is that when you do your personal income target and let's say you target over 110,000, the number becomes bigger and you divide it by 50% and it slips into column B, 250 to the 500 column range, $500,000 range, then you're going to take that number and use these percentages in column B. So then this owner's comp would be, let's say it's $125,000, divided by 0.35, then your business needs to bring in $250,000 or $260,000 in gross revenue. Now, I don't want you to worry too much or focus on the numbers in terms of detail as to, because again, these are fictitious numbers. These are just for illustrative purposes. The point of this exercise is to A, identify your why, B, put a dollar figure on your why, and determine what your business needs to do in sales in order to achieve that personal income. These are the jobs of every dollar that your business earns. This is their responsibility. So every dollar that comes into your business has a responsibility to pay profit, you the owner, its tax obligations, and its operating expenses. So that's the entire purpose of this exercise. Now, another worksheet, as I mentioned in the previous slide, I input a number of $65K on the owner's compensation line. And this worksheet is what I use to determine that. So this worksheet is something that you would then pull out and you'd look through your financial reports or just your bank statements and categorize what's been paid out to yourself, the owner, from your business. And again, we're using 2021 as an example. But the key here is that we need to remember that all expenses that are showing on our profit and loss are not necessarily business expenses. And that's why this worksheet is more detailed. Because oftentimes we as business owners think that just because it shows on the profit and loss, it's an automatic expense. But that's not always the case. Because you see, as an example, you could have your business bank account pay for your personal cell phone. And the owner justifies it by saying, but I use my cell phone for my business. And 100%, that might be true. But is it 100% used for your business? Likely not. If you're anything like me, I carry one cell phone. It's my personal cell phone. And I do use it for both my personal texting with my friends and family, but also with my clients, phoning and texting and messaging. So we have to remember that just because it shows on our business financials doesn't mean it's 100% a business expense. Because in an example like using the cell phone, the CRA would question that and likely disallow that portion of the bill. So in general, we need to be sure that if the company, just because it's coming out of the business bank account, doesn't mean that it's 100% a business expense. But oftentimes we owners throw that into the operating expense and it becomes a regular bill. But in actuality, it is to benefit the owner themselves. So again, these are the percentages that I was speaking about before. The author of the book Profit First, Mike Michalowicz, he researched hundreds of thousands of businesses during his writing process. And in that research, he determined that these percentages based on the different revenue levels are how to allocate to a fiscally fit business. So you'll see these presentations or these percentages referenced throughout the rest of my presentation as we go through as the basis of the Profit First cash flow management system. How are we doing so far? Does anybody have any questions, comments? I'm just looking over to my second screen here to see your faces. Okay, I'll keep plugging along. Oh, do you have something? Somebody came off mute? No, we're good? Okay. So one thing I talk a lot about as well with my clients when they engage with me is that they have a vision, they have a dream of where they want to get to. So we need to have a starting point. So our starting point in implementing these cash flow techniques, we begin by using your accounting reports from the past so that we can pull the numbers we need from them. But the overall idea in managing your cash flow is so that you do not have to pour over financial reports every time you need to make a decision. But in order for us to get to that, we need to know where you are right now, so then we can create the plan for where you want to go. So on this worksheet, this is called the instant assessment, and I'm going to work through another illustrative numbers just for the sake of this presentation with you, just to show you what it means. And again, this is a worksheet that will be available to you at the end of the presentation. So this is a cash basis instant assessment. And what we're going to do is we're going to use your financial report. So first, we're going to look at your profit and loss. Now, the difference with this is oh, I do see a chat. I'm sorry. I'm just going to go good stuff. Okay, awesome. Thank you, Trevor. I'll keep going. So in your profit and loss, in your accounting software. Now, if you do your own books or you have an accountant or a bookkeeper, you can absolutely ask them how to pull this report. Because normally 100% of the time in Canada with our CRA regulations, all of our reporting is done on what we call an accrual basis. And that's because it's regulated by the government. And so our accounting systems automatically also pull these reports on an accrual basis. But the difference here, to see where your physical cash has been moving in and out of your business, we have to pull them on a cash basis. So if you're using accounting software, there should be a radio button that you would do that with. So we're going to pull your profit and loss on a cash basis to look for your top line revenue number. And so at the very top of your profit and loss, whatever income you received, in this case, we're going to use 180,000. That's the number you write at the very top. So as I progress, you're going to see that I'm going to fill in numbers here using this actual column first, because this is what your business has actually done. Now, the materials and subs. This mostly relates to the trades industry. So if you are a service-based business, chances are this line will be 0 for you. But if you are a trades business, then this is where you would look at your subcontractors and your materials, and you would put that number in here. And then the real revenue number is just carried down if the mats and subs is 0, or it's subtracted from the mats and subs to make your real revenue number if you're in the trades business. Now, the next line, profit, we'll come back to that. That's the very last thing we fill in. So for owner's compensation or owner's pay, the next line, if you look at your profit and loss, it should have an account called payroll expenses. If you are an employee of your business, you are in that number somewhere. So you're going to want to be sure to take the amount that you have physically been paid. Let's say, just for illustrative purposes, let's say that number on your profit and loss is $100,000, but you, the owner, were paid 50 out of that 100,000 that shows on your profit and loss. You're going to take that 50 out of your profit and loss expenses and place it here in the owner's compensation line, because that's you. Because again, just because it is showing on your profit and loss as an overall payroll expense, you are in there somewhere. The next thing you're going to do is you're then also going to look at your balance sheet on a cash basis and look at any shareholder withdrawals. Because if you have taken a shareholder loan out of your business and it ended up being dividends, like on a T5 at the end of the year, that number also gets added to the your employee payroll in this example, because this is what's dictating to us where your physical cash went from your bank account. And as a side note as well, part of the profit first methodology when I'm structuring your business to this, the owner's comp, it's not just your net pay that comes out of your business. It's also, we gross it up to include the EI and CPP. So if that $50,000 is net, you're going to also want to look at the lines on your P&L that says the taxes, the federal taxes, the payroll remittances, and add that as well. So it could end up being 75, for example. So there's a little bit of adding and subtracting going along there, but in order to get a true picture of where your money is going, that's what we have to go through. And again, this is just a starting point. It's not going to be this difficult as you go forward. So the next line, tax, we want to look at what tax was actually paid to the CRA. Not what you owe in taxes payable or what is accruing, but what was actually paid from your business bank account to the CRA in the time period of your reports, excluding sales tax. GST, PST is taken off the top line. That is we use that as a separate structure. So this is just your business taxes. So in the case of again, using 12 months of 2021, let's say your accountant came back to you and said your corporation owes $5,000 in taxes, but you only paid $3,000. You put 3,000 in this line, not 5, because again, we're working on where your cash is going, not what is owing. So I'm throwing just some numbers in here. In this case, this sample company, $45,000 was in payroll. It went to the owner. $9,800 was paid to the tax man, and we determined that $150,000 is operating expenses. So that's what paid for everything else in the business. Now, again, another side note to think about here is you may look at your profit and loss and say, my report does not show expenses of the number of $150,000. And the reason for that is because not all monies taken from the operating account or on the expense line of your P&L are actual expenses. They might also show on your other reports, the balance sheet. So this is where your balance sheet comes into play when you're extracting data you need for this assessment. As an example, so if your company has any loans that it's paying on, and I'm talking about actual loans, right? Something your company has financed. Maybe your company has financed some equipment or has a startup loan. The monthly principal payments, those monthly principal payments are leaving your bank account and they are affecting your cash flow. But for reporting purposes, they're showing on your balance sheet, not the profit and loss. So as an example, if you pay $2,000, your business pays $2,000 a month to a loan, $1,500 shows on your balance sheet, $500 shows of interest shows on your profit and loss. But in actuality, when we're talking cash flow, we take the 2,000 and put it in this operating expenses line, because again, it's cash coming out of your business bank account. So in essence, you are doing some subtracting owner's pay, i.e. owner's comp from your P&L, and adding in some, principal payments if you have. So you're looking at both your reports. So it might seem a little confusing at first, but once you come to the mindset of where did the money actually go, that's what this report is showing you. So now that leads us to our profit line. Now, what we don't want to do is take that profit number showing at the bottom of your P&L. This is not your actual cash profit. This is the profit for reporting purposes only to the CRA. Instead, what you will do now is more subtracting. Take your real revenue minus your owner's compensation, minus your taxes paid, minus your operating expenses, and that gives you a number usually in red. It's common, nothing to freak out about. We help you fix that, but it is common to see that this profit number will be a negative number, because this is your cash bleed. So what we do then is we turn these into percentages. Now, because again, like I said before, we need to know where you are so we know to get you to where you want to go. So by looking at these numbers, we're going to use our real revenue line and divide it by these bottom numbers and come up with percentages. And I'm just going to quickly fill these in for you. So 150,000 divided by 180, turns out our operating expenses are costing our company 83%. 9,800 divided by 180, turns out we only paid 5% in taxes. 45,000 divided by 180, 25%. Profit, negative number. The most important thing to remember here when you're working through an assessment like this is these numbers all have to equal, and these percentages all have to equal 100, because that's how your business stays fiscally fit. So I'm going to fill in the profit first percentage numbers. So this line here, this column, this CAPS is the acronym. It means current allocation percentages. This is your starting point. This is where you are right now. If we add these numbers up, 83 plus 5 plus 25 gives us 113 minus 13 equal 100%. We know we're bang on with our percentages. The TAPS column, another acronym, is called the target allocation percentages. This is where we want to get to eventually, according to the sheet that I showed you earlier with the lines of percentages and all the different revenue levels. So we want to get to from 13% negative to 5% profit, from 25% owner's comp to 50%. 5% tax to 15% tax, 83% operating expenses, bring that down to 30%. So the profit first dollar figure to relate to that percentage, 5% times 180, we should have $9,000 in profit by the end of the year in our bank account. Our owner's comp, 50% is actually in actuality 90% of 180. 27,000 is 15% of 180, and 54,000 is for operating expenses. You can see how that percentages, those multiplications work out. Now what we do here, we call it the bleed. And so basically this is telling us that in order to go from minus $124,800 to $9,000 in profit cash positive, we need to move our cash $33,800. To go from 45,000 paid to the owner to 90,000, we need to increase by $45,000. And same with the tax. To go from 9,800 to 27,000, we need to increase by 17,200. Now, with the operating expenses, we're going down. We need to go from 150,000 down to 54. That's a deficit, a negative, or a cash of $96,000. Again, the percentages all equal 100. And if you added up 33,800 plus 45,000 plus 17,200, you get the total of $96,000. So this is where your money is going. So what we're going to do is we would create a plan to increase your profit, increase your owner's compensation, increase your taxes, and decrease your operating expenses. Because these are the jobs that every dollar your business has when it comes into your business. Its job is to pay you profit, pay your owner's comp, pay your taxes, and your operating expenses. Sound good so far? Any questions or concerns? We're good. Got some nodding heads. Okay, perfect. So the beauty of using the methodology of my coaching is based on the Profit First principles. And yes, it's a book. It's called Profit First. If you've never heard of it, if you've never read it, I suggest you do. It's an easy read. It's written by Mike Michalowicz out of the States. You can see it in my background here. But it is based on the Profit First principles in that it falls in line with our already existing behavior of looking at our bank balance to make business decisions. Because here's the reality. As a business owner, you don't want to look at your reports when you have to make a quick decision. The accounting equation tells you, accounting logic tells you that when you need to purchase something for your business, you should either A, open up your accounting software, look at your profit and loss and your balance sheet to decide if you can afford it. B, call your bookkeeper or accountant and ask them if you can afford it. Or C, you go to your bank account, look at your bank balance and say, yep, I can afford it. I'm going to go spend the money. This is where the methodology comes into play, and it works because that's majority of the time what we already do. We look at our bank balance because we don't have time to go ask the bookkeeper or the accountant if we can make a business decision. So the difference with using these cash flow techniques is that instead of using one bank account where all of our money is stored and all of that money has multiple jobs to do in our business, we set up multiple bank accounts so that each bank account dictates the job of the money that is being housed inside of it. Now, quite often, when I mention the multiple bank accounts, business owners usually object and they're like, Janet, do I really need all these bank accounts? Why can't I just track this on a spreadsheet? Here's the truth. I usually reply with, you can absolutely track it on a spreadsheet. But that's a logical solution to a behavioral action. And you might start off with good intentions to track where every dollar is going in your business, but it's going to get tedious. And in the long run, you'll give up. Because that's what we do as humans, right? It becomes something that we have to track. It's no different than me trying to lose weight. The health coach says I have to track every morsel of food I eat. I start off with great intentions, but let's be real. After about a month, I'm tired of tracking. So we just fall off. We just don't do it. So that's why we use the multiple bank accounts, because yes, it's more bank accounts, but no, you're still only using one or two to make your business decisions. All we're doing is making sure that every job that comes into your business is housed in the correct bank account. Like one of my clients, when I first started working with him, I mentioned the process. I'm like, okay, we're going to have to set up minimum 5 bank accounts. And he was at first he gave me the deer in the headlights look, and he's like, no, that's going to be way too confusing. And I said, okay, let's trust the process. And so we kind of worked through and had some mindset questions and stuff like that. And we've been working together for about a year now. And the whole methodology has hit him to the point that now he's coming to me saying, I've realized another job my money has. Can I open another bank account? Absolutely. When in doubt, open an account, because when you get that clarity of what those dollars are meant to do, what jobs they have in your business, we need to put them into another bank account because that's their intended purpose. So he's coming to me now and asking for more. So it's kind of funny. So it's good. And this is why it's so an easy system to manage. So you know exactly where your money's going. He also had a few months ago, we were having one of our monthly meetings, and he says to me, my bookkeeper just told me how much I owe in GST, PST. And he said, I was shocked. I was worried. I'm like, how am I going to pay this? This is what his face he was making to me. He said, but then I opened my bank and I realized my GST PST account has more than enough in it to pay. I don't have to worry about it. My sales tax is covered. And in fact, there's more in there than I actually need to pay to the government. And he literally had a sigh of relief and realized that it was easy for him he could pay it without a concern. So another question, though, I hear quite often, if I set up all these bank accounts, that means more work for my bookkeeper, which could cost me more money. The reconciliation work that your bookkeeper will do to reconcile all of these extra bank accounts is pretty negligible, because the majority of the time, we're still only working out of your income account and your operating expense account. The other accounts really only get 2 transactions per month. And so therefore, the amount of time it would take a bookkeeper or accountant to reconcile 2 or 3 transactions a month is super simple. So because we've predetermined the amount that will be in your operating expense account. And so really, that is the only account that you'll have to look at going forward to know how much money you have to spend. So have you ever asked your accountant, where's the money? You know, the profit that shows at the bottom of your profit and loss statement at the end of the year? And your accountant responds with, it's not real, it's on paper only. Why is this? Because again, the reality is most people use their bank account balance to make business decisions because they don't fully understand those accounting reports. And guess what? They don't want to, and they shouldn't have to. Their passion is their business. They just want to go and do what they love to do. So these cash management systems is super simple so that allows them to do that. Because the common accounting equation is sales minus expenses equals profit. That's the one we've been taught for many, many years since the dawn of time of accounting. Yes, it's a logical equation and it makes sense for our reporting. But have you ever thought of a goal that you wanted but didn't make it a priority, i.e. you didn't put it first? What happens? Nothing. It doesn't. Because as humans, our behavior is the same. What we put first gets done. What we put last gets ignored. So that is why when you work with me in these cash flow techniques, we flip the equation to sales minus profit equals expenses, so that we can assure that you are driving profit first and getting paid for the work you are doing in your business. In flipping this equation, this now forces you to look at other ways to achieve the same goals in your business. So instead of asking the question, how much money can I throw at this problem? The question becomes, what are other avenues I can do to solve the same problem without spending money, or without spending as much money, or without finding somebody else to do it for you? What are some other ingenious ways that I can be creative to accomplish the same goal? So by flipping this equation next year, when you ask your accountant, where's the money, you'll have it in your bank account. Because profit is not an event, profit is a habit. So now here's the most exciting part. Remember at the beginning, I mentioned that you can receive a bonus just for owning your business. Now I'm going to explain it. So by now, as you've gone through this presentation, you probably know that profit is the #1 thing you need to focus on. That paying yourself as the business owner is the #1 thing you need to focus on. And while that is super exciting in itself, the more exciting thing here is a bonus. When you follow these cash flow techniques, you are setting yourself up as the business owner so that every calendar quarter, 4 times a year, you are being paid a bonus just because you decided to take the risk and be a business owner, just because you decided to run a business. You deserve a reward for that, and that's what this profit does. That's what these cash flow techniques do, because you are the hardest working employee in your business. You might come back to me and say, I have a great salesperson, I have a great HR person, I have the best operational manager around. 100%, yes, you do. But that operational manager, that HR manager is not up at 3 a.m. when taxes have to be paid and you don't know where the money's coming from. That operational manager is not up at 4 a.m. trying to figure out how to make payroll this week and what credit line to use or what credit card to pull it from. You are the one who takes on all the worries of your business, every single angle of it. And so you deserve a bonus just because you own it and you decide to take that risk. And I guarantee you will get a profit every single quarter because this cash flow management system of Profit First is specifically designed to deliver those bonuses to the people who own the businesses. So here's the neat thing. I was able to use technology to my advantage, and I created a QR code. And this QR code allows you to now grab your phones, open up your camera app, and you can take a picture of this QR code. What this QR code will do is it's going to take you to another site called my Janet or JKM free resources. Within those free resources are all of the worksheets that we talked about here today. So you have them available to you for free to download them and use them at your own for your own business. Also inside those resources, there's some FAQ questions, there's some videos that I've posted on my own social media. There's all kinds of neat things in there. All I ask of you is to deliver your email address to sign up to get them. And then you can download anything that's in there. So you can learn about me a little bit more. You can learn about the cash flow techniques. You can use these resources. There's some chapter previews in there. So there's all kinds of stuff in there for you. And full disclosure, because I'm nothing if I'm not 100% transparent, because that's who I am as a person, you will receive emails from me after you do this sign up. But if you choose to unsubscribe, yeah, I'm okay with it. The most important thing is I want you to make sure that you have these worksheets available to you, so you can go ahead and use them. So that should be all. We're now coming to the end. We're at 1:45. By this point, I might be sounding like the Peanuts teacher, you know, wah, 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 and you've all kind of disconnected. So I'll make this quick. So at the beginning, I mentioned that my firm is a certified Profit First firm. And what that means is that I am a part of an elite group of bookkeepers, coaches, and accountants who are certified in this cash flow methodology. There's only approximately 1,000 of us in the world. 40 of us live here in Canada. And in fact, there's only 3 of us in Saskatchewan. So that's a big deal because we are the only ones exclusively trained in this model. So if you happen to scope my social media, you'll come across some videos of how I describe Profit First. And basically, I refer to this system as Grandma's Money's envelope system on steroids because it's super simple, but it has a large impact. So it's no different than Grandma when she take her cash every week, put it in envelopes, say this is for groceries, this is for mortgage, and so on. Now we do it with your business. So with that, again, my name is Janet, and I'm with JKM Strategies. I'm on a mission to empower women business owners, specifically moms running full-time businesses, to be the moms they want to be without giving up the hobbies that make them happy. And it all starts with cash flow, or in other words, telling your business, this is all you get. What I do is take away the struggle of juggling it all, give you financial security without the guilt, without the overwhelm, and without constantly trying to figure out how you will find time to do it all. I coach them to structure their business using simple cash flow strategies so they can focus on why their business exists instead of how it exists.
Well, with that, it leaves me to thank you, Janet, for this wonderful Power Up session and for the advice and insight you shared today that our members can put to work right away in their businesses. So a reminder to all of you, we're on the lookout for other great presenters like Janet on topics you care about. If you have any suggestions for future topics or speakers, just let me know. Simply send me an email to trina@saskatoonchamber.com. And also be sure to check out all our upcoming events and register for those by visiting our website, saskatoonchamber.com, and follow the Chamber on social media at the Chamber YXC. And always look out for our weekly e-blast called the Chamber Check-In every Tuesday. So with that, thank you everyone and take care, and we'll see you next time.